Statistics indicates that most money managers underperform the market over time. So why bother with research when we could just put our money in an index fund with a low management fee? That is a superb question. So if you go to my website and you do a search on mutual funds, you'll see I've done a ton of videos on why mutual funds are an absolute scam. Okay, so all you got to do is type up mutual funds. So the problem with mutual funds is they have very high fees. They have very high fees and they underperformed ETFs. Now, ETFs are a collection of stocks that usually represent an index or another asset class. For example, the SPY is an ETF for the S&P 500. The Qs, which is 4Qs, represents the tech stocks in the NASDAQ. And when you invest in these index funds, the fees are usually 0.5% or way less, okay, usually. Versus if you invest in a mutual fund, the fees can be 5%, including hidden fees, and the mutual funds underperform the indexes. Why do the mutual funds underperform indexes? Because emotions take over when a portfolio manager is underperforming and she or he tries to chase performance into year end. It gets worse though. In most countries, governments will reward you for being patient and a long-term investor because governments don't like volatility. As a result, if you own something and you sell it after 1 year and you make money, you pay less profits than if you own something and sold it in less than 1 year. Okay. If you sold something in less than 1 year, that's called short-term capital gains. Okay, and you pay more taxes. Mutual fund managers buy and sell all year long trying to chase performance, especially at year end, which gives you a massive tax burden as well that you only find out about when you file taxes. Two more things I want to say on ETFs because I think you can save a lot of money. So what I want you to do is let's go together to finance.yahoo.com. Okay, don't ever pay for any investment research out there on the web, and don't take anyone's advice on what to buy. I'll never tell you what to buy. I humbly teach you how to fish instead of giving you a fish. But if we type here SPY, there's two things I want to look at. Okay, so the first thing I want to look at is volume. Then the second thing is I want to look at the price or the fee to invest in that ETF. So the first thing we look at, and this represents 500 stocks that make up the US economy. The first thing we look at is the average volume. Now the average volume is over 100 million shares times $440. So yes, you can get it in and out quickly if you need your money. So it's very liquid. The next thing we look at is the profile here. Again, this is all free. And you look at the expense ratio. Okay. So remember before I said you want it to be under 0.5%. Well, this is pretty cheap. This is a good deal. So after you do your research. So for every $100 you invest in this ETF, you're going to pay 9 pennies every year in fees, which is not bad. You can also look at the holdings here to see what's in this ETF. And there are 12 categories here, or GICS codes as they call them, within the S&P 500. The S&P 500 represents the United States economy, which is very tech heavy. And you can see the largest holdings here: Apple, Microsoft, Amazon, Meta, etc. Okay. Now, in terms of another website for the best ETF screeners on the world is a free website called Etf Database. That's etfdb.com. And what you can do here is you have a menu of different types of ETFs you can invest in. Okay. And you can even research it by country as well. Okay. And sector, etc. by clicking the ETF screener down here, or ETFs by geography. So say you want to invest in Brazil, and you don't want to buy individual stocks and you want to get in and out quickly if need be. You click here on beautiful Brazil. I went there. I stood by the statue of Jesus in Rio, which was beautiful. So you click here EWZ, or EWZ as we say in Canada. And what you can do is if you click this, you can learn more about this and invest in companies that are in Brazil. Now, you can do this for every country as well. So if we type here, and I'll wrap this one up quickly, I promise you. If we type here EWZ, we see here it's liquid, 27 million shares per day, times $36 we can get in and out. The fees are going to be higher because it's not traded as much. Now the fees aren't shown here, but it's closer to 0.5%. You can also go to holdings and see what the holdings are. This data is not updating, it usually does. Type in EWC, and this is for Canada. So if you want to invest in Canada, you can do so as well. Again, check out the volume, the fees, as well as the holdings. Now, in terms of doing your own research, what you can do is, I've got this product that I created for my MBA students that will help you do investment research on any company. It's awesome. So why don't we download it together? And this is part of the MBA program, but it's a massive template, and I think you'll enjoy it. So what I want you to do is I want you to go with me to haroon.education.com/all lowercase EMS 4-2. Okay, and this will really help you to do research on stocks so that you become an investor, not a tourist. You don't just rent them. So what you can do is you download this file. Don't click it and run it within Excel or within the browser. And then you open it up, and I ask you about 100 questions that will help you screen and understand, look at me buying time, to help you screen and understand if you should invest in a stock or not. Give me 1 second. So I think it's in my download files. So the download key is Control-Shift-K. Here it is here. Okay, good. Okay, so it's a massive spreadsheet, and basically there are 3 different sections here. One section is qualitative research, the other is quantitative, and the other one is financial analysis. And so you can step through all of this if you want to, and I ask you tons of questions, and on every single tab there is a video you can click on to learn much more about that topic, how to navigate that tab, as well as how to do investment research. And all it does, it goes over here and you can click on play. Okay, so I'll mute this here, but I walk through it all. It's in 4K as well if you change the settings. Yeah. And then what I also provide you with here is an investment research dashboard. Okay, so based on the data you enter in, right, and this is all linked, many links in here as well, and it's a small spreadsheet. Based on the data you enter in, it will show you many different charts so we understand the macro and micro side of investing in a company. Then I have a one-pager created for you automatically. Okay, you hit print and it's all fed into here in real time. Okay. Or you can print a detailed report as well, which is a 150-page research report on the company. And I want you to do your own research always, please. And this, by the way, this is available to my MBA students. I provide you with just a ton of arrows in your quiver or tools in your toolbox. But I want you to always do your own research, please, and don't rely on me. Otherwise, if you don't do your own research and you don't do your own investment write-ups, then you'll commit the most criminal sin in investing, which is you'll sell stocks when they go down. And Warren Buffett once said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Selling something because it's cheaper. Doesn't make any sense, right? But if you do the research and do those one-page reports or the 150-page reports, your call, using my many templates I provide you in my MBA program, then what will happen is this. You won't care as much about volatility because you'll have a target price, and I teach you how to financial model and value companies in that template. And all you'll say to yourself is this: I don't know the path of this stock, but I know the destination. And let's say you buy a stock and it's going okay. It's going up a little bit. And then 2 years later, the stock goes down a bunch. Then I want you to go back to research report you wrote, the one-pager or the 150-pager. And I want you to ask yourself, if I had known about this new risk, which is causing the stock to go down today, 2 years later, if I had known about this risk when I first made this write-up, would I have still bought the stock? And if the answer is no, don't be emotional, sell it. If the answer is yes, buy more if it's not a full position. Yeah.